Now, with the housing and mortgage market moving at lightning speed, there's a lot to talk about. So let's do it right now. Anthony Landahl from Equilibria Finance joining us. You were saying just during the break then, not a lot to look at in housing right now, is there? Of course, you're being very facetious because it is on fire. We're seeing this across the globe though, aren't we, at the moment? And of course, this is mainly fueled by those record low interest rates. But at the same time, obviously the regulators, the central banks keeping a close eye on what's going on.
They are keeping a close eye. Look, it is fueled by low interest rates, but there's a couple of other factors, which means I think it's not going to run out of steam for a little while. We've got people looking at how they live, where they want to live, moving to regional centres. We've got investors been sitting on the sidelines, opening up opportunities for owner-occupiers. So there's a number of factors. We've had people at home saving for deposits. So there's a number of factors that have been driving this I guess, as you said, lightning speed rise in the market with auction clearance rates at 80-90%. So yeah, the regulators are starting to, well, there's talk, whether the regulators are or the media, but there's talk about whether they start looking at trying to slow that in, rein it in a little bit, either through regulatory action or interest rates. But the Reserve Bank governor said rates are going to stay steady for 2 or 3 years, which is creating a little bit of debate as well.
Yeah, but he did say in that speech yesterday, in fact, that they do have options at hand.
Yeah.
But obviously, he hasn't really articulated what that may be.
Yeah.
But I guess you look at what's going on in New Zealand at the moment, which tends to be a bit ahead of Australia, from what I can see, and their prices just astronomical at the moment, and obviously they're looking at macro-prudential regulation.
Yeah. There's other levers they can pull. They've got, obviously there's interest rates, which is your monetary policy, and obviously the governor's concerned about inflationary impact on unemployment if they increase the rates. But there are other ways they can slow credit, and they'll be looking at particularly areas around low deposit loans, where the loan to value ratio is getting closer to 80-90%, up around the 90% mark. They'll also be looking at investor behaviour. Investors are starting to come back in the market, and they'll be looking at the amount of new lending to new home buyers, and that's where they can, I guess, tweak some regulation around different ratios they use, floor rates they use to assess applications, debt to income ratios that can, in effect, have a similar effect of interest rates by slowing access to credit. And the banks may start doing that independently of regulation anyway, given volumes and some of the things they're wrestling with.
So really, you don't think this growth rate is sustainable?
I don't think it's running out of puff because there's other factors other than interest rates, but I think there will at some point be some slowing. To keep it in perspective, we've seen an increase in mortgage lending of around about 4%. Now that's not out of the ordinary in one sense. I think it's just a shift in where that's going. It's a lot of home buyers, it's a lot of young people, and it's a lot of movement in a short amount of time. And a lot of people have lowish deposits, so there's some concern around that. But I think with investors coming back in the market a bit now, people changing behaviours as well around where they're living, looking at different opportunities. Supply is still a bit slow because if someone wants to sell, they're looking at the market they're trying to buy in. So that's still holding supply up. So yeah, there might be some headwinds coming to slow it down, but I think there's a bit of steam left in the train in terms of the next couple of months.
And it's not just property, of course. We're looking at small and medium enterprise loans, businesses, which may be well affected sort of towards the end of the month when JobKeeper comes off. How are those loans looking at the moment, just in terms of volumes?
Yeah, in terms of volumes, the government so far has lent about $40 billion. And that was initially designed for a lot of smaller businesses to keep them in hibernation. The government, was going to announce today, as I understand, an extension of that small business loan guarantee scheme for those businesses remaining on JobKeeper. So it's pretty specific industries they're looking at. They're going to increase the guarantee to 80%. They're going to increase the threshold to $5 million, and they're also going to increase the criteria for businesses up to 250 million in turnover. So that's quite an extension in the program, but it's very targeted to those businesses. So it's going to be looking at tourism, hospitality that have still been on JobKeeper from January 4th. So it's a much more targeted system. But Andrew, back to your point, a lot of those small business loans haven't been fully drawn. People took them out as as a cash provision. A lot of those funds haven't been utilised. People are starting to pay them back. They're re-amortising them or restructuring them now to reflect their business operations. So I think on the whole, businesses have been handling them pretty well, and banks have changed their assessment criteria from when that program started, with a lot more rigour around the lending in that area too.
And what's the outlook for that sector then going forward?
Well, I think it depends which part of the economy you look at. As we all know, there's parts of the economy that are racing ahead. There's obviously then the travel and hospitality in those areas that are still being affected. But again, as the news reported today, the government's targeting those areas with some assistance in tourism and travel and flights to take people to regional centres to spend their money in areas that have been more adversely affected. So I think some of those initiatives make sense rather than just handing out money. They're specifically targeting areas that have been affected. But yeah, there's going to be some businesses that are affected beyond the JobKeeper threshold, and we'll see how that plays out. Will there be a cliff? I don't personally believe so. I think it'll be more. I think there'll be a bit of a transition for businesses as they adjust.
Well, we will keep talking about the property market though, won't we? Just as it goes up and up. Yes.
She's been busy, no doubt about that.
All right, Anthony, great to have a chat. Thanks for joining us from Equilibria Finance.
No worries at all. Cheers.